This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us on the telephone, our financial and diamond expert, Harold Siegel. We're taping the show on June 21st, 2013. Our time is 8:41 in the morning. As we start today's show, our thoughts and prayers go out to those in Calgary. Our show runs in Calgary. All the flooding in southern Alberta, even into central Alberta. Very serious situation, and we are thinking about you as we are on News Talk 770. Next week in Edmonton, we will be on the air at 11 a.m. due to the fact that there's the NHL draft. And good luck to the Edmonton Oilers and Calgary Flames with the draft. And Worldwide Precious Metals, they were in Edmonton during the week, and want to thank everyone who came out to speak with them and all the investors and clients who spent time with them. Thank you for meeting with them while they were in Edmonton. They will be coming back to Edmonton and Calgary very, very soon, and obviously you can connect with them anytime by going to their website, wwpmc.com, or 1-866-623-2002, their telephone number. A radio show, it's on your favorite radio stations. It's also archived on Harold's websites, hesradio.com, rarecoloreddiamonds.com. We have a podcast through iTunes. Type in World Financial Report on Radio. You can find it there. Our show is portable. iPad, iPod, iPhone. You can take it anywhere. Harold does daily market commentary as well. You can find that on his websites and through the podcast as well. But as we start today's show, what a wild and woolly week it was. And Ben Bernanke definitely took the markets to the woodshed yesterday on Thursday. It's almost really unconscionable, Harold, as I was saying to you off air, what he's done. He's juiced these markets, and then he comes out and really takes a hatchet to them. A lot of people get hurt financially. It was really all across the board. We had people taking some major, major hits. And I personally don't believe for a minute the Fed is in a position to start tapering. I think they're in a dream world. They are in a situation where their back is against the wall and they don't know how to get out of it. And they put out this tapering, and I find it very hard to believe that they're going to be doing it anytime soon.
I think you're right, Randy. Again, desperate times bring on desperate measures, and these are definitely desperate times, and the markets are certainly showing it. Again, I agree with you. What in the world was he thinking when he did that? I mean, all it took was one word out of his mouth, and the market drops 550 points in 2 days. So it's an unbelievable time. And now we know how the markets are going to react when they do end quantitative easing. So, the fact is that the Dow Jones dropped on Thursday 350 points. The TSX plummeted. The NASDAQ, the gold market was down $75. Silver was down almost $2. Oil was down about $3. And a lot of it has to do with the fact that when the markets fall like this, a lot of the stock traders are heavily leveraged. Means that they leverage their stock positions sometimes 30, 40 to 1. So when the markets fall, they immediately have what are called margin calls, means that because you only put up what is called a good faith deposit type of thing, when the market falls as heavily as it did, by the end of the day, if you're in margin, you've got just a short period of time in which to bring your account back up above the margin level. And that's basically what happened yesterday. As all the markets were falling, especially the stock markets, a lot of these dealers and a lot of the traders were heavily leveraged, and they had to sell anything that had any value to meet their margin calls, otherwise they'd lose their position. I know it sounds a bit confusing, but that's the wonderful world of money and leverage, and again, it's why we never recommend that you go into a heavily leveraged position. Don't trade the heavily leveraged stock markets, and don't trade the heavily leveraged commodity markets, because when the markets are going your way, it's a great thing. But when the markets go against you like they did yesterday, you can lose money very, very quickly. So we now know, again, that obviously higher interest rates are terrible for the stock market and terrible for the real estate market, and all the bank stocks are dropping. So it's a very, very difficult time at this point. That's why, again, a lot of the recommendations for the last several months has really been to be very, very, very conservative. not to take any necessary risks. Again, the paper markets, you can see how heavily they sell off and how quickly, just on one word, how quickly this market is going to fall. So, and it's not only in the United States. I mean, it's all over the place. China is in terrible financial trouble, and it's all going to come to the forefront within the very near future. Europe is in such a horrendous recession that car sales are at a 20-year low in that area because nobody has any money and nobody's working. So, the fact is that what the governments were really banking on is that they were going to put this money back into the market. They were going to reignite the economies and get things going and get people working again and getting people to spend money, but that's not working. So $85 billion a month here in the United States being put back into the bond and stock markets is not doing anything. And all it took was one word out of Bernanke's mouth yesterday, or on Wednesday actually, to send the market into a tailspin. And wait till you see what happens when this market really starts to fall, because you've got that derivatives market that nobody really understands, that's so heavily leveraged, and it's not regulated in any way. It's one of the most dangerous situations you've ever seen. Gold dropping $70 in a day is ridiculous, but again, we said that the market was probably going to come down to $12.50. The month of June is a very negative month for gold and silver historically, and it's proven to be that way again this year. So we've been saying that the gold market should come down to $12.50. We hit $12.85 today. We're up $13.70 in gold as we're taping the show. But there's no doubt in my mind that we will test that $12.50 level. If the $12.50 level does hold, that's the support level, a major support level for gold. Silver basically broke $20 this morning, went to $19.67. It's trading right now at $19.97. Again, there could be a little further downside in gold and silver, but looking at the Commitment of Traders report, most of the short positions, if not all of them, are out of the market. So my gut feeling at this point here is that as erratic as this market is, if there's no more shorts in the market, mean nobody betting that the market's going to go down, then why would the market go down? So I'm thinking that at this particular level, especially in gold and silver, that we've got a tremendous buying opportunity. Nothing really has changed as far as I'm concerned in the overall fundamentals of the market, because when you owe as much money as the U.S. and Europe owes, which is in the multi-trillions of dollars, eventually that's going to hit the marketplace. So there's no doubt in my mind that gold and silver are still an excellent investment. Again, they've been very volatile, and if you're heavily leveraged, you can see that it's a difficult market to be in. But if you own the physical market, I do believe that this market is going to come back and come back strong, and in actual fact, it could come back very strong by the end of this year. I don't think enough to, make brand new highs type of thing, but I do believe that we're very close to the bottom of gold and silver, and I do believe that these markets have every reason to come back very strong. The other thing is a supply and demand situation in gold and silver. The demand physically for gold and silver is extremely high, probably higher than it's ever been, and the supplies are at their lowest levels. If that isn't a recipe for higher prices, I don't know what will be. So, again, I know a lot of us are very upset about the way that these markets are trading. And again, it goes all the way back to the desperation that these countries and these banks are holding at this particular point. In fact, the banks are in huge, huge trouble. Just look at what the bank stocks are doing. Look at how low they are at this point and realize that the banks are holding tremendous debt and is not a good place to put your money at this point. So, again, this is not only a situation here in North America. This is a worldwide phenomenon that is going to wreak havoc on the financial markets. It's a good time to be in certain assets like hard assets that you own outright that are not heavily leveraged, that you don't have to worry about being taken away from you. It's a good time to be in the diamond market. Diamonds are not leveraged, and diamonds are not traded on exchanges, and diamonds didn't fall the last 2 days that all the markets in the world did. So, again, there are certain assets that will do very well for you. I'm still a big holder of gold and silver physically. I'm not want to sell markets on panic situations. And again, I think that that's what we have at this point. So again, let's see what happens as gold approaches the 1250 level, and silver, which should have held the $20 level, is trading at 1997 right now. It does show that there could be a little further downside to silver, but I do think that we're getting close to the bottom of this market, and I do believe gold and silver are still an excellent investment that eventually are going to come back up to the highs that we saw in 2011 and go on to make brand new highs. I just don't see any way in the world that at this particular point that they're going to pull the plug on quantitative easing, because at that point the Dow would drop probably down to about the 7,500 level, and that's the last thing in the world the government wants to see at this point.
Well, the Fed governors have come out and said they see interest rates the way they are now until 2015. Very positive for hard assets. They're talking about possible tapering in the middle of 2014. They're still printing $85 billion a month. Still a very positive thing for hard assets. And some believe that there's a concern of deflation. They may actually have to increase their quantitative easing to fight off deflation. We'll have to wait and see how that plays out. Worldwide Precious Metals. They're the company Harold knows and trusts when it comes to you investing in hard assets: gold, silver, platinum, palladium. Obviously, it was a confusing week. We have a free weekly newsletter we send out free of charge by email every week. If you'd like to get your name on the list, speak with Worldwide Precious Metals, 1-866-623-2002. The website, wwpmc.com. They'll be happy to talk to you about why you should have an allocation of hard assets in your portfolio at all times, good and bad times. Jim Sinclair, really one of the top minds, along with Harold and people like James Turk and many others, John Embry, when it comes to gold. He said on his website, "I know gold will go to $3,500, but days like this are not easy when you care." He also said, "The economic system is failing, and to counter the now publicly perceived failure, central planners are manipulating the symptoms and not the problem. Gold has never been easy. Gold is the telltale of a broken system. Gold, therefore, is the barometer of the risk factors of economic conditions. Therefore, central planners must make, via paper gold, every effort to make it say all is okay. For this reason, I intend, knowing the system is in collapse, to buy gold with every resource I have at my disposal today and tomorrow. I suggest that those of stout heart do the same. To the others who have committed to their limit, hunker down one more time, knowing that in no more than the summer, a brand new and more powerful bull market in gold will be at hand." And you can read that quote and read more in our newsletter. It was interesting, Jim Rogers, who is a huge commodity bull, has written a book about it in the past, said that he actually bought more gold this week. When gold was going down, he purchased. And he said the bull market is far from over. He says, "Bull markets climb a wall of worry. I'm not quite sure where the supply is coming from that would cause the bull market to end. Maybe they know something I don't, but when you look back at the stock bull from 82 to 2000, stocks collapsed in 87, 89, 90, 94, 97, 98, and every time people said the bull market is over, it wasn't. This bull market in commodities is definitely come to an end. It will come to an end someday, but someday is not here yet. I bought more today. As a matter of fact, I buy a little bit, not much, over the last few days, just in case this is the bottom." And he's talking about gold and commodities. "I would not be surprised if there's another chance to buy a little lower, but I'm buying and I'm owning it. I haven't sold any. All these things will end in a bubble someday. Long bull markets always end in a bubble or mania before it's over with. And when there's a bubble in gold, I hope I'm smart enough to get out. We haven't seen a bubble yet. Until recently, if you went around the United States, any city, you would see signs outside many jewelry stores saying, 'We buy gold,' and the American people lining up to sell gold. Later, there will be signs saying, 'We sell gold,' and people lining up to buy it in big ways. That has not happened yet. But Jim Rogers, a very smart man, billionaire who had an affiliation through the Qantas Fund with George Soros, traveled the world and is a well-known investor, still bullish on commodities, still bullish on hard assets, buying gold on the dips. And Harold, I'm not surprised at that at all. I do agree with him. I don't think this is done yet. And with the financial system perilously the way it is, due to financial engineering from the Fed and them not really knowing how to undo it, there is going to be a lot of volatility in the days and weeks and months ahead.
Oh, there has to be. Again, people are starting to panic, and when they panic, again, they tend to trade emotionally type of thing, and that's the worst thing that you can do in these type of markets. The best thing to do is to keep your head about you and just let the market settle down and figure out where you're going to go from there. But to panic and to do the things that most people do when these markets start to trade like this, again, will only end up hurting you. So I see tremendous volatility in the market also. This week, we've seen two of the biggest down days that the Dow has seen this year. So, 350 points down on Thursday, and the market did open higher today and just went negative. So you are going to see a lot of volatility, and the most important thing is to not speculate, because when you're speculating in these type of markets and they start to do what they did on Thursday, only losses can really come from it. So the smart thing to do is just to be very, very conservative and to sit back and let the markets come back to us, and we need to reanalyze and figure out where the markets are going to go from here. And basically, we need to see that the 1250 level in gold is going to hold. If it doesn't, it is possible that gold could fall further. The thing that I'm looking at that's very positive about gold at this point, again, is that the Commitment of Traders report shows that the banks have stopped shorting gold and are buying back their positions. So that, in combination with the fact that there's a shortage of physical gold and silver, should move this market higher. And when the conditions are right, this market could absolutely fly. When we saw gold down $70 on Thursday, we could see it up $100 another day. So, again, we got to get used to this type of thing, because these are not your normal markets. And, again, it's all out of desperation. And when desperation is happening, you want to stay away from that type of scenario. You want to sit on the sidelines. You want to let the markets do their thing, and then you want to figure out where you want to go from there. I'm still very convinced, as are a lot of people, that over the longer term, gold and silver are still going to come back and make brand new highs, and I believe that that is going to be true.
Speak with Worldwide Precious Metals. They're the experts in this very specialized field. When things get confusing, they're the people to talk to. And really ask them why you should, at this time, have hard assets, gold, silver, platinum, palladium, in your portfolio. Their telephone number, 1-866-623-2002. 1-866-623-2002. Their website, wwpmc.com. And don't forget, you can get our free weekly newsletter, the companion to our radio show, through Worldwide. They'll be happy to send it out to you free of charge. A couple of interesting stories on silver this week, and it was interesting to note that Stephen Lieb believes massive demand is going to send the price of silver skyrocketing. He says the silver bulls really have been hit hard. I understand how they must feel looking at silver trading at not much above $20 an ounce, but silver is going to be powered by two things. One, it's industrial demand, which is going to get even larger, a push from solar technology, and in fact, I think in the next 3 or 4 years, the biggest demand for silver will be in the energy market, even though investment demand will remain strong. Silver was a currency before gold. It's easy for the common person to carry around silver as coinage. Gold is too expensive to be practical, especially if I'm right that the gold price is going up tenfold. So silver is going to have a role as a monetary metal, and it's going to continue to have a major role as an industrial metal. If gold is going to go up tenfold, let's say, and he's very optimistic, obviously, 13,000, silver will go up to at least 15-fold, $330. The silver bulls just need to hang in there and continue accumulating. He says as the price of gold soars, more and more people in China and India and other parts of the world will begin pouring money into physical silver. This will have an effect of creating major disruptions in supply, but this correction had to happen. This is part of a big bull market. You also have to have the West acting in a desperate fashion. And this is all they can do with in this desperation right now. And he's saying, God help us. The West is running out of ammunition. And once this bull market starts roaring to the upside again, the West will be left with nothing but obviously no firepower left in their guns. One of the things that really caught my attention, Harold, and he talks about other uses for silver. There were two stories this week, and one of them was from the Daily Mail out of the UK, and one from the Silver Institute. And the Daily Mail had a story, and they said silver really could be the new weapon against superbugs. Adding it to antibiotics boosts the effectiveness by 1,000 times. Silver could be a precious weapon in the fight against antibiotic resistance. Scientists have shown that given tiny amounts of silver at the time of taking antibiotics makes the drugs up to 1,000 times more effective. And then on top of it, the Silver Institute had a story about silver being an important weapon against superbugs, combating, obviously, bugs that are in hospitals. And they're talking about the use of silver-infused products. You can read that story in our newsletter as well. But this story from the Daily Mail that I found really got me thinking about silver in a whole different way that I have before. I always thought about the industrial and medical uses. But when they're talking about using it in antibiotics and it being 1,000 times more effective, Harold, we have about 2 minutes left. That really gets you thinking about the applications that silver has beyond investment and industrial use.
That's 100% true, and that's the reason that you should be bullish on silver, not only for its monetary value and investment value, but the fact is it's used in so many different usages, and there's a shortage of it, that it's got to go up over the long term. So once this volatility is over and people look at the supply and demand situation in silver, they have to understand that it's a phenomenal investment to own over the longer term. You just want to own it physically. So again, I truly believe that silver is going to make new highs and go on to be a very, very important investment and a very important metal, and I agree with what you said 100%.
One of the other things that caught our attention, and these items you can find in our free weekly newsletter, speak with Worldwide Precious Metals about getting on our free email list. 1-866-623-2002, the website wwpmc.com. Ivan von Greyerz out of Switzerland, and he's an advocate for gold and silver, said silver is coiling for a major upside explosion in price. Looking at the gold to silver ratio, it looks like silver will have a major move and will be heading much higher. The gold to silver ratio is approximately about 65. It is overbought. And a fall of the gold and silver ratio means that silver will go up a lot faster than gold. So there's a greater potential in silver now. Silver, I could see moving very fast to the upside. And he is a strong, obviously, advocate for having gold and silver in your portfolio. They always say that gold is obviously one of those things you need in your portfolio as an insurance policy. Silver is like gold on steroids. If you'd like to learn more, speak with Worldwide Precious Metals, the company Harold recommends you use when it comes to investing in gold, silver, platinum, palladium. wwpmc.com, their website, telephone number 1-866-623-2002. And once again, they would like to thank everyone in Edmonton that they met with. And those in Calgary, obviously, they will be meeting with you very soon, and our thoughts and prayers are with you with what's happening with all the flooding in your city. Come back and talk about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. We are taping the show on June 21st, 2013. Harold Siegel is our expert. He's joining us via the telephone, our diamond and obviously precious metals expert. You can connect with the company he recommends you use when it comes to investing in gold, silver, platinum, palladium, Worldwide Precious Metals. Their telephone number 1-866-623-2002. The website wwpmc.com. They would like to thank everyone in Edmonton that they met with here during the week. Thank you for taking the time to meet with them. And obviously our thoughts and prayers are with those in Calgary dealing with all the flooding. and it's a very serious situation. Our radio show runs on News Talk 770, and those in Calgary, we are thinking about you, and worldwide is as well. They'll be in Calgary somewhere down the line, and we will let you know when that happens. Should mention, in Edmonton next week, our radio show is on at 11 a.m. 11 a.m. due to the fact that they have the NHL draft, and good luck to the Oilers and the Flames in the NHL draft. Should mention, our radio show runs on your favorite radio stations. Also, we are archived on Herald's websites, hesradio.com, rarecoloreddiamonds.com. We have a podcast through iTunes. You can type in World Financial Report on radio and listen to the podcast on your iPhone, iPad, iPod. We are portable. Our radio show goes anywhere. And do not forget, Harold does daily market commentary on his websites. You can find it on the podcast site as well. It was an amazing week for Rare Colored Diamonds. RareColoredDiamonds.com and its companion site, hsfineauctions.com. Harold held an auction on Monday, and he will tell us about it. But first, the featured diamond of the week. This is one of the most impressive diamonds I think we have ever seen or offered. It is a 7.57 carat emerald cut fancy intense yellow internally flawless. This is an amazing diamond. And Harold, you obviously have that diamond for somebody to invest in. And then on top of it, congratulations on the auction Monday. It was a massive success.
It was thank you very much. It was the best auction that we've ever had. We had 17 diamonds up for sale, and all 17 sold. People got great deals. It was very exciting. I've got to say how proud I am of the technology that we developed for this auction site. It worked absolutely perfectly. This was our 10th auction, and this was the best one of all. Everything sold, 17 diamonds in 1 hour. It's difficult to do. Actually, my voice tends to crack at the end of the hour. It's so exciting to be in a situation like that. But I want to congratulate everybody that attended the auction and did very well. We had people attending from Canada, United States, from London, England, Australia, Hong Kong. In fact, we made our first sale in Hong Kong. We also made a sale in Australia. And we also had investors from the Middle East that joined. So it was really phenomenal. It's a business that we're just developing. Very few of our clients are selling any diamonds at this point, so I've really been putting up primarily my own collections of diamonds that I bought many years ago, and it all worked out extremely well. So again, I want to congratulate everybody that participated in the auction. The next auction is going to be October the 21st, and you'll get to participate in that. Meanwhile, with all the volatility in the markets, one thing that does not get affected in a negative way from all this volatility are diamonds, because they don't trade on the exchanges. So you don't get those, huge downward movements like you get in stocks and commodities when the timing is, as like it was this week. So when you look at diamonds are a much more stable investment. They don't skyrocket in price. They don't plummet in price. In fact, colored diamonds, the really good ones, the rare ones, never ever fall in price. So on a week like this week, where the markets have been as crazy as they have been, those of us that do own diamonds, can sleep a little better at night knowing that they're not affected by what's happening in the commodity and the stock markets. In actual fact, we have certain diamonds, deep flawless diamonds, that when the Dow Jones falls, these diamonds become even stronger. These deep flawless, triple excellent white diamonds are negative correlated to the stock market. So, if they did end quantitative easing, which eventually they will, and if the markets get very volatile and the Dow falls heavily, these are the type of diamonds that will increase the amount that the Dow actually falls. So we do recommend deep flawless white diamonds very heavily. They're very, very hard to get. The ones that we cut are the best in the business. They're the triple excellence as far as the round brilliance. We cut for the only diamond fund in existence in the world today, and our clients that own those type of diamonds are very, very pleased, especially when you look what's happening with the banks. The banks are in big trouble. The banks are losing money every year. They lost so much money in 2007 and 2008 when the markets plummeted, and they've never really recovered from that. And we also know that due to Cyprus, keeping our money in the bank is very risky. to get 1 or 2% and take the risk of losing your money by keeping it in the bank is a fairly foolish thing. When you can put your money into a diamond, not all of it, but you diversify, but you put your money into a D-flawless white, for example, they go up by 15% a year, and they never, ever decline in value. And these are the type of diamonds that we resell to our clients all over the world. If you've got $100,000 sitting in the bank that's doing absolutely nothing, collecting 1 or 2%, when inflation's worth more than that, you need to put some of that money into a diamond because it's portable private wealth. It's safe. They never fall in price, but they can increase in value tremendously. Yellow flawless diamonds, which we're about the largest dealer of, they increase by 15 to 20% a year. They never, ever decline in value. And again, they're very safe investments and very, very beautiful diamonds. Pink diamonds from the Argyle mine, they go up by 15 to 20% a year, except for the vivid pink diamonds, they go up by about 50% a year. So again, when you're looking at the volatility in the stock markets, in the commodity markets, when you're looking about what's happening in the banks and realizing we're not getting any return and how dangerous it is to keep your money in the bank, you definitely want to look at the diamond market. Now, not all diamonds are investment quality diamonds. Yellow flawless diamonds are, D-flawless diamonds are, Argyle pinks are, red diamonds are, blue diamonds are, green diamonds are, pink diamonds are, but not all diamonds are investment quality diamonds, and you have to be aware of what you're doing if you're going to make money in the market. We're also the only company that can resell your diamonds for you, and a lot of people are now starting to discover that. Now that we run our auctions, we've had several calls from people that have invested in diamonds through other companies and now realize that those other companies cannot sell their diamonds for them. So now they're stuck. And now they're coming to us and saying, will you sell our diamonds for you? Well, in most cases, our competitors sell inferior diamonds, diamonds that are not necessarily investment quality. So the answer to that is primarily no, because we have to guarantee every diamond that we sell. My company name is so important that we're not going to sell a diamond that we didn't sell ourselves initially because we're not confident on the color and on the quality of a diamond that another firm sells. For example, there's firms in Toronto that sell yellow flawless diamonds, but they're Indian diamonds. They're cheaper diamonds. They're not like the South African diamonds that are extremely strong and a very strong color. They're more brittle, and again, they consequently do not go up in value anywhere near as the South African yellow flawless diamonds. So you have to know that type of thing. In pink diamonds, there's 9 different shades of fancy pink, fancy intense pink, and fancy vivid pink. So you may think that just by buying a fancy vivid pink diamond, you've got the best diamond that you can get, when in all reality, you could have a very weak fancy vivid pink, and it's not worth anywhere near as a strong fancy vivid pink. So you really have to know what you're doing if you're going to invest in diamonds. Don't go by price, because price is not going to tell you the right picture. There are no real deals on diamonds right now except through our auctions. There were some tremendous deals, and people were very, very excited with what they bought. But there are no deals on high-quality diamonds right now. They're the most in-demand asset that there is. People all over the world are so concerned about the stock markets and the paper asset markets and the cash markets, the dollar markets and currencies, that they're putting their money into diamonds. And again, you really need to know what you're doing. So we guarantee everything that we sell. And we're the only company that owns their own auction business to resell your diamonds for you. So again, we built this for our clients to resell their diamonds, and judging by that last auction, our auction site worked perfectly. Our technology was spot on. It's live, it's real time, there's a half a second delay. Our clients did very well. We went off without a hitch, and we sold 17 diamonds in 1 hour, and our clients were ecstatic about it. So again, and now we've got clients buying diamonds from England, from Hong Kong, from Australia, from all over the world, and nobody else has that. So again, with the state of the world economy, as difficult things are getting out there, look at the diamond market as another avenue for safe money that will basically protect what you have and actually make you profits, where there's really nothing else in the marketplace at this point that is as safe as a diamond that isn't traded on exchanges like commodities and stocks are. So again, at this particular point, our strongest recommendations are in yellow flawless diamonds. They start at about 15,000 and they go up from there. If you look at the featured diamond this week, all you have to do is look at that diamond, look at the video, and understand what that is. It's one of the rarest yellow diamonds that you'll ever see in your lifetime. Asher cuts, those square emerald cuts, are ridiculously rare, and any diamond that's yellow and of good quality and over 5 carats, those diamonds are excellent investments. But this diamond is 7.5 carats. It's an intense yellow flawless, and it's an Asher cut. You can't get better than that. A diamond like that will just outperform any other asset on the market today. So all you have to do is look at the featured diamond this week to understand how rare and beautiful a diamond like that is. Now, we just put that up on Thursday onto the website, and we've already had 12 inquiries into that diamond. That's how special that diamond is. You want to look at yellow flawlesses. They start at 15,000 and they go up from there. They increase by about 15 to 20% a year. They double every 5 years in value. Means that if you invest $20,000 into a fancy yellow flawless, internally flawless diamond, you'll get back in about 10 years from now, you'll get back about $80,000 on a $20,000 investment. You tell me any other investment that will give you that type of return with the safety that you have in the rare diamond market. Now let's look at pink diamonds from the Argyle mine. They start at about 25,000 and they go up from there. These are the most concentrated form of wealth in the world. They never, ever decline in value, and the Argyle mine is scheduled to close within the next 5 to 6 years. There will not be hardly any more pink diamonds, and the price of these pink diamonds will skyrocket in price. And how popular are pink diamonds? Well, we had 17 of them up. Actually, we had 15 of them up on the website for the auction, and every single one of them sold. We also had 2 Cartier rings that sold, and we had an orange diamond ring that sold. So it was a phenomenal auction. The pinks did tremendously well. It really started out to be an Argyle pink diamond auction, but at the last minute I added 2 signed, numbered Cartier diamond rings and an orange diamond that we had put away. So it was a phenomenal auction, and the Argyle pinks, every single one of them sold. They're about the best investment diamonds that you can buy. Now we also want to bring to you these D-flawless white diamonds. They represent 0.001% of the marketplace. They're absolutely spectacular. These are perfect diamonds in every way. They go up by at least 15% a year, and they're negative correlated to the stock market. And, you know, when I brought them up about a year ago, nobody really knew what I was talking about. But as there was more and more auctions and people started to see how these D-flawlesses were selling at auction, well, they were selling for 2, 3, 4 times what the estimates were. In fact, Elizabeth Taylor's D-flawless white diamond sold for 300% more than what they anticipated it would sell for. And for those that think that just because it was Elizabeth Taylor's is why it did that, the next week another D-flawless came up for sale and it did the same thing. It sold for 300% more than anybody else, than the experts said it would sell for. And then every auction that's happened after that where a D-flawless diamond has come up for sale, it's sold for 2, 3, 4 times what the experts thought they would sell for. So again, what we're bringing to you are the type of assets that you need in order to get through these difficult times. It's very difficult to make any money in the markets today. The stock markets are risky, commodity markets are risky, they're all over the place, the governments are desperate, so are the banks. Again, what do you do with your money? You put it into the bank, you could lose your money if the bank goes under, and you're only getting 1 or 2% anyways. Take some of that money that's at risk and put it into a diamond, a yellow flawless, a D-flawless, or a pink Argyle diamond, and not only will you get through these difficult times, you'll be way ahead of everybody else. You're going to have the type of assets that are going to do nothing but make you money. On top of that, we've expanded our business into Europe, Asia, Middle East, Australia, all those areas, so our clients have the opportunity to sell their diamonds to high net worth individuals and pick up a stronger currency, and that's exactly what we're doing. So I've never been more excited about a marketplace, and again, on weeks like this week where the markets have absolutely just hammered us and beaten us up and broken people down and, you know, everything, it's nice to know that an asset like these diamonds are doing extremely well, and they don't trade on exchanges, so they can't be manipulated the way that stocks and and commodities are. So, again, I'm very pleased with what's happening in the diamond market, and it only promises to get better and better. It's not too late to get into the market. In fact, yellow flawless, D flawless, and Argyle pinks are still priced reasonably enough that you can get involved in that market.
Connect with Harold at rarecoloreddiamonds.com. The featured diamond of the week, you can see it on the website. You can see it in our newsletter. If you'd like to receive our free weekly newsletter, connect with Harold at rarecoloreddiamonds.com or 1-800-432-1022. He'll be happy to send it out to you. This is a stunning diamond, a 7.57 carat emerald cut, fancy, intense, yellow, internally flawless. And we found some interesting stories this week and last week. And by the way, we're into, obviously, the first half of the year. And the first half of the year brought us some excellent auction results. And if you would like to see those auction results from Christie's and Sotheby's, we would be happy to send them out to you. And this week, a great article, Diamonds as a Physical Investment on the Cusp of Developing. With gold prices taking it on the chin of late, the door for diamonds as a physical investment has begun to open. Diamonds, generally thought of as a jewelry gift for a special someone, or in some cases apologetic, are seeing an opportunity in the world of metals-dominated physical investments. We're right at the cusp of this developing, according to Matt Mason, President and CEO of Stornoway Diamond Corp. The target in the future is to have 15 to 20% of the world's diamond demand be purchased for this purpose, for physical diamonds as an investment vehicle, according to Mason. You can read that article in our newsletter last week, and we can send these articles out to you. The Financial Times had an amazing story on yellow diamonds, and they compared those to pink diamonds from the Argyle mine. Obviously, the Argyle mine, very few diamonds coming out of there, limited source, the mine about to end. And they said about yellow diamonds, comparative abundance when compared to Argyle pinks. Take a look at that story from the Financial Times. We will be happy to send it out to you. We also have actually another story from the Financial Times, and it is about diamonds in general, colored diamonds, and we encourage you to take a look at those articles, get our auction results. And Harold, now is a time to speak with you about diamonds, rarecoloreddiamonds.com, telephone number 1-800-432-1022. But I think you bring up such an important point when you talk about quality of diamonds. People may be investing in a yellow diamond. They're thinking they're getting top quality, but they're not. They need to make sure that they deal with someone like yourself, the worldwide leader, when it comes to investing in naturally fancy colored diamonds.
Well, I appreciate you saying that. Again, I'm very concerned about it because we got 3 calls last week from people that bought from competitors and now cannot sell their diamonds in any way. So, again, that was always the thing with the diamond market. When I went into the business and I looked at it in its total situation, I always knew that diamonds were a good investment, but there was never a secondary market to resell them, and that's where we're developing. And it's a time situation. It doesn't happen overnight. We've had 10 auctions, and now we've attracted the largest audience that we ever had at last week's auction. We had 150 people that actually attended the auction worldwide from the comfort of their own homes. So, again, build it and they will come, and that's exactly what we did. I'm so proud of Relentless Technologies in Vancouver, my friends up there that built the site. It's the most amazing auction site ever built, and it's the only one of its kind. And now we're expanding it all over the world, and that's primarily to help our clients do what they need to do, which is invest in an amazing asset, and then have the market in which to resell it. And that's what I'm most proud of. Building H. Siegel Fine Auctions was probably the most important thing that I've ever done as my contribution to the diamond industry, because realistically our business is changing the diamond business as it sits. So I've never been more excited. I see what our clients are doing in diamonds and seeing, the returns that are going to come our way. And again, I've never been more excited about anything than what's happening in diamonds at this point. Now, again, I'm still excited about the gold and silver market also. I hate the fact that the scenario is as bad as it is, that's forcing all the markets all around the world to be as volatile as they are. But volatility that brought the market down, it's also going to bring the market back up again. So all in all, I'm a firm believer in hard assets. I own a lot of gold and silver physically. I haven't sold any of it. And I own a lot in diamonds, and I continue to buy more, as do my clients.
Connect with the company Harold recommends you use when it comes to investing in gold, silver, platinum, palladium. Let them educate you, as they did a lot of Edmontonians when they were in town this week, about having, yes, in your portfolio today, gold and silver. WWPMC.com, their website, the name Worldwide Precious Metals, telephone number 1-866-623-2002. RareColoredDiamonds.com is Harold's website. The telephone number 1-800-432-1022 is auction website if you want to take a look, hsfineauctions.com. Next auction October 21st, and speak with Harold about the featured diamond. It's a stunning 7.57 carat emerald cut, fancy intense, yellow internally flawless. And one of the quotes that we had last week was from Dr. Philippa Pippa Malmgren, and she was the former special assistant to the President of the United States for Economic Policy and former member of the U.S. President's Working Group on Financial Markets, also the head of the Global Asset Management Business for Bankers Trust in Asia out of Hong Kong, was chief currency strategist for Bankers Trust, former head of the Global Investment Strategy at UBS, and she was a senior assistant consultant to Deutsche Bank, currently advising largest sovereign wealth funds in the world, hedge funds and pension funds in the world today. And this is what she had to say. It was very fascinating. I think this is one of the many reasons that institutions that I'm advising are wary about gold, is because they do feel it's subject to manipulation. That, as a result, the volatility is too heart-stopping to withstand at times for some. And they are looking at other options. One option is definitely the world of diamonds. I see lots of private wealth moving in that direction. That's one reason we see diamonds hitting absolute record prices. It's because you can move an immense amount of value across a border with this in your pocket, and a metal detector cannot find it. By the way, I was in charge of anti-money laundering policy for the U.S. government, so I'm not condoning this. I'm just saying it's a fact. In a world where inflation pressures are definitely ripping through the emerging markets, people want to move value. And in a world where currencies are being debased, they want to hang on to value. Harold, we obviously want everything above board, no one doing anything illegal. So we agree with what she's saying here, that we're just saying this is we're stating fact here, but we want everything done above board, and you do everything above board. But these are the times that we live in, and we have about 2 minutes left in our show. These are the times we live in, and you can see someone like a Pippa Malmgren saying that some of these large institutions are looking at diamonds.
Again, they should be. It's a very important asset class, but again, you need that secondary market in which to resell them. That's what we're building, and that's what's going to change the diamond business. Again, the worse the world economy gets, the more that happens with currency devaluation, like what's happening in Japan, and the markets are volatile like in the States and China. People are going to start to go back into safe assets, and again, safe assets like diamonds, vintage cars, those type of assets do extremely well during these type of times, and they bring you an awful lot of pleasure. You look at your stock portfolio and your statements at the end of the month, and you get sick from it, but you look at that beautiful diamond sitting on your wife's finger, and that brings a smile to your face, especially when you're going to sell it 5 years later for a ton of money.
Thank you very much, Harold Siegel, for your knowledge and another fascinating show, and we wish everyone in Calgary good luck and hope everything is okay in your world. Obviously, the flooding down there has been very tragic and a major, major disruption and affected a lot of lives, and we wish people well.
We certainly do. Again, it's heartbreaking when our friends go through that. Just look at what's happening all over the country. I mean, you've had those tremendous tornadoes in the middle part of the U.S. and the forest fires in Colorado and flooding and everything. It's just a very difficult time. We just wish everybody the best. I wish everybody a wonderful weekend and a very profitable day.
And we had a tornado watch here in Edmonton too. Don't forget, next week in Edmonton, 11 a.m., we will be on the air on Sunday due to the fact that there is the NHL draft. Good luck to the Oilers and the Flames with the draft. And connect with Worldwide Precious Metals to invest in precious metals. Harold recommends you use this Canadian company, been in business for over 10 years. Speak with them. They thank everyone in Edmonton they met with. 1-866-623-2002. And rarecoloreddiamonds.com is Harold's website. Telephone number 1-800-432-1022. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.